The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour here, right here on TFNN. Check us out on Tiger TV at TFNN.com or on your mobile phone anywhere in the world at TFNN.mobi. All right, well, we've had some interesting markets today, up, down, up, down. We got the S&P currently down about 3 ticks. We have the Russell in positive territory, up 6 points on the day. We have the Nasdaq up 4 points on the day. And the Dow is down 12 points on the day right now. Oil currently up 20 cents, but has had some just fantastic moves on it. And looking on over at natural gas, it is currently down about 1%. And taking a walk over to corn and soybeans. Corn is currently down $1. Soybeans down $30. Massive move on soybeans. Just huge over there, almost 2.5% right now. And a lot of people, they avoid the ag markets. They don't understand them, whatever. But I love the ag markets, but I trade them on Nadex. The bid-ask spread is a little wider, but the ability to, use that product with defined risk basically more than counterbalances that issue. Looking at euro dollar, it is up 25 pips on the day. We got Aussie dollar up 37. We got pound dollar up 17 pips. Dollar CAD is currently down 36. Dollar franc is down 35. Euro yen right now is down 64. Pound yen is down 73, and US yen is down 62 pips on the day. Let's go ahead and look at what news we had come up overnight and walk through that for you step by step. And, what pieces could you put together to actually place these trades? Well, last night we had the preliminary GDP on the pound, right? So preliminary GDP, it came in at 0.6 on an expectation of 0.6. So that's good. They met expectations. Not fantastic. Usually not a massive mover on of itself when they do meet expectations. So what does that chart look like? And is there anything we could do to, take advantage of it? And so let me pull up a chart for you. Let me get another chart right here. There we go. And bring that over to the screen. And let's grab the pound dollar. So right here, we currently have the pound dollar. It moved from last night. We can see we got a sort of a drop off. Market was sort of disappointed. They wanted more out of that GDP, and I was shocked of the move we got. But it still hit the average. It obviously was well within the average range. It actually exceeded the average range on that. And it is a GDP being such an important number. We usually do get a pretty good move on GDP, regardless if it's off the number or not. But I'll pull up the stats for you, and we'll look at it and go into that trade. So the stats on the pound dollar, I talked about these yesterday on the radio show, and 70% of the time it moves more than 50 pips. And the average move, regardless of what the announcement is, the average move from high to low, okay, is 70 pips. And we definitely, exceeded that within 2 hours there. So if we use a little ruler right here, go over here to 430, and then we'll draw this all the way down here to about 630. And we got a move of about 108 pips. So we obviously exceeded that expectation of moving 70 pips on the day. We got that again. GDP, usually a big mover regardless. A lot of times I will look to move for break even. You would have got break even pretty quick and easy on this trade if I don't get a big change from the expectation. But the market just was not real happy, like I said, again, with them just coming in at that, and that dropped on the pound a little bit in that trade. And so that gave us the pound announcement. We had a couple others come out as well. And let's see here. Right now, we got the pound dollar there. Let's go ahead and look at our other announcements we had. Core durable good orders. They came in lower than expected, and unemployment claims came in a little higher than expected. So both of those sort of negative on the dollar as a whole, but still not usually a major mover. So 8.30, and we can see, right there we did get a little pop right there on it. So we got about 20, 30 pips, and that's usually what I expect on the unemployment claims report. It's about a 20 to 30 pip move, and then it just sort of leveled off for a while over on the indice or on the forex pairs. And we look at euro dollar. That's another good one to look at. You check out euro dollar. I'll check out dollar CAD, dollar yen, dollar franc, and so euro dollar right here we see was really oscillated a lot around the settlement price last night. And we moved up half a deviation and down half a deviation, basically a one deviation perfect move, and then all the way back up another deviation. And currently sitting up at 1.3234 on the day. And then let's see, that's our euro dollar. Let's check out our Aussie dollar. Pull that back up. Aussie dollar went in and moved up about half a deviation after going down half. So we got a nice one deviation move from low to high, also on Aussie dollar. So expect that to start slowing down now that we got a full statistical deviation move on the currency right there. And let's check out some of our crosses. So we got dollar yen. And currently that's moving on down, but we moved a deviation, so that the probability of a bounce at this point is pretty high. And so right here, we sort of right around 11 o'clock, we almost got there. We hit the one deviation mark from low to high, and now we're looking on a bounce currently at 99.60. And so that wraps up dollar yen for you. Let's go ahead and check out dollar CAD. So on the dollar CAD right there, we got to move down almost down to a one deviation mark. Right now the dollar's really just been weaker a good chunk of the day, and versus stronger, but the yen's been even weaker, I guess, at the moment. Based on, I think we'll see that weakness is starting to pick up on the yen, so that's why we're starting to see the dollar yen rise. And most of the currency pairs that had a lot of strength are starting to weaken off a little bit. But almost a deviation move on the dollar CAD as it's starting to pull back up now. And we look at the dollar franc. We'll see a very similar price action right down there, move down to the one deviation line, starting to pull back up. So starting to get basically, again, the weakness, but starting to settle in on the other pairs in comparison to the dollar, who has been really weak, pretty much all morning. Now, with that, let's go ahead and check out one of our favorite things to do each day. We'll look at it to see, is there a setup? Okay? Do we see a good potential setup for placing the trades? So I'm going to go on in to the scanner. I'm going to go to, let me show you this. I'll bring it up, walk you through step by step how I do it. So we got the spread scanner up, hit reset filters. You can choose live or demo at the top. You can choose like your contract size right there. Okay. And then once you've done that, go down here and you can either do spreads or binaries. Now, a lot of times I do premium collection about this time of day on silver and gold. So I'm going to go to the binary scanner. Again, I can change my quantity to, whatever, right there. Once I've done that, then the next step is I'll put in, if I have my filters like reset, I'll put them in at 65 to 95. And I'll say, show me stuff expiring here in the next, 15, maybe even 30 minutes on there. And then I'll go down and I'll select my markets. So in this case, I'll select silver and gold. Copper's already closed in the pit for the day. You have the weeklies, but the pit is closed, therefore the dailies are closed. And I can go down here and see, is there anything currently in existence that I can trade? Silver sort of popping in and out. Has one that might, if we get a little pop right there, might be a trade. So I get that one ready. Just pop open the ticket. I like to, if they're popping in and out, I like to open the tickets up. I can even open all of these tickets. And that way I just sort of have, okay, these are the potential ones that I may trade. And I'll open them all up. Keep those ready. And right here. Okay. So there's my gold tickets. And then we'll go ahead, we'll click that silver ticket again. Get that one opened up right there. And now that we've done that, I can move the scanner off because the scanner helped me find the potential trades. And now I'll look at this one. It's like, all right, well, this is at 96.50. Obviously, I'm not going to be buying it at 96.50. We're trading sort of, sideways. I don't even like the trade, period. But down at like 2010, that's only a couple ticks away. Probably not the trade I want to do at the moment on silver. So I'm going to back off on that trade. And I'm going to go over, let's check out gold, okay? So right now I'll just move this one off my screen. And we'll look at the gold market right now and see what we can pull up. So right here we have gold. And we want to make sure we're looking at the right contract on Nadex. This is gold August, so I want to make sure I'm looking at the August contract. And then we'll look at sort of where it's headed right now. We got 1328.2, 0.3, 0.2. And it's oscillating a little bit, so I'm going to take a moment. You don't have to rush into these trades. We got 13 minutes, okay, until this trade actually comes up for expiration. We got one up here at 1330. That's almost 2 points away. We got one here at 1327. Get 20, almost, a little over $20 profit on that trade. But I like that one. I like the profit potential on that one. But gold overall, if you look at it, sort of, more in a downtrend. We're making lower highs and lower lows, right? So just looking at the angle right here, we're starting to cross under the 8 EMA. So you want to be really careful about going, buying on this thing, because if you buy on this, you could get yourself caught. So there may or may not be one. We're going to have to carry it a little bit closer. But that would be, if you're buying, I'd be buying the 1327. If I'm selling, I'd be selling the 1330. 1330, I love the distance. I don't like the profit on it right now. It's okay, but I'd really rather get, closer to $10, $15. Ideally $20 if you can. The one on the buy, the distance is okay. It's almost a point. But we are coming up on the market close, so just be aware of that. And we are sort of trending down on the bar, so it's a little bit more dangerous of a trade if you hop in on it. If you do these trades, one thing to always remember is you got to get out if it hits your strike. So if you go in and you buy the 1327, you're saying it will be greater than 1327 at settlement. And settlement is the last 25 trades filled on futures, okay, on Nadex. The last 25 trades filled, they get rid of the top 5 and the bottom 5, and they average the middle 15. Okay, and that's going to be your settlement price. Notice I haven't hit a button here yet. I just got it up. So if it gets down and hits 1327, you need to bail on that trade. But trend to me is very important on these trades. I tried to do butterflies. It didn't work out as well. And but I do like, going, like, pick a direction and go with it. And that's been a little bit more successful of a strategy for me when I'm doing these trades, because it basically just kept me in line with what's actually happening. And I'll keep the scanner open over here on the side, so that way if I do see a different trade, a different strike or contract pop up, then I can do it. Now, these strikes are 3 points wide, so we're probably not going to get another one. But those are the two trades to be keeping your eyes on. And we'll be back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, here we are. And right on back here to the Diagnostic Trading Hour. And so we're going through, we're looking at gold, we're looking at silver. You know, silver is basically just about to wrap up right here, right now. And we got somebody trying to put some order in there that's totally bogus, so be careful on those. But I'll see orders come in, and sometimes they're stupid orders, sometimes they're orders to see if somebody's stupid enough to take them, I guess. But there's orders still at 20.1 to sell at $50, which is just asking to get, like, you know, slammed. So if you go and you do take that order to sell, then you're probably going to lose $50, and you're basically giving $50 to the other person. So one of those trades I'm not in large favor of taking. And so silver's now closed on out. We didn't really get a trade on silver. On gold, we do have that trade sitting there, that 1330 trade at $10 was able to be filled on that. So as long as it stays below 1330, like I said, still have that downtrend bias overall, then we'll be able to be profitable on the trade. And got 10 contracts in on that. So it's not a huge profit trade, but it's a trade that has a nice distance on it. And so therefore helping increase our probability. And just remember, you always want to be ready to hop out of a strike anytime it comes up. But I had to have the price sitting there because it'd pop up and come down, pop up and come down, over and over and over again. And sometimes that's the only way you're going to get it if it's really close, is just to set the trade in there and let it do its thing. Okay? And but, you know, those were our 2 contracts. I had this one sitting there, but didn't really like the direction on the long side. It looks like it would have worked out as well in this case. I just didn't take advantage of it because I just didn't see the trend being my friend at the moment on that trade. I was more in favor of the short one. And right there, I mean, you can sell them for 50 cents, but that wouldn't really do you any good at all. And you could buy them for 97, but you're going to pay $1.80 in exchange fees, so you'd make $3 and give away $1.80, only make $1. Wouldn't do you a lot of good to do those either. So it's just good to know, you know, what strikes you're looking for, what trades you should be looking for. And if there's anything there that, is a trade that's worth your time, that's worth your risk, worth you putting money in the market to possibly do. And there we go. It's wrapped on up. So we are in that 2-minute dark zone. You always got to be aware of the dark zone when doing premium collection because you're probably not getting out. Okay? So, meaning that somebody's probably not going to take your trade. Now, there are some trades that are sitting in there. I could go in on these 1330s and, I could buy them back, in there. I could buy them for $5 or whatever. But, make $5 on a $10, risk trade. So I could actually do that and get out of the trade right now if I was still concerned about it. I would just hit that. I would flip buy and hit place order, and I'm out of the trade. Okay? So if I was concerned, I could do that. And I'd make a small profit, a very small profit. But I would make a small profit on the trade. So it's just always good to know sort of what's there and do I want it. And if I'm ever nervous, just belt. Okay? So they're not worth sticking around. The profit's not high enough to make it worth it being too close on you. All right, so that wraps up gold for us here. And let's see what we got on the metals. By the way, just a gold wrap up on the price action there. We got down -5, up +5 right there. We went to +7. We're sort of settling right around +5 it looks like here. And so we got a solid, 1 deviation move, a little bit more than a deviation move from low to high. And let's check out copper. What do we got on copper over here? So on copper right here, we can see we got to move down to basically a 0.3 up and about a 0.7 down. So you did get a 1 deviation move. And as a reminder, if you ever want to measure the deviation, you just go from the high to the low. So, 0.0450 right there. And then I can just go from like settlement, plot it on my chart here, up to 1, 0.0425. So I did get a 1 deviation move before it turned and bounced. And again, I really only expect a 1 deviation move at any given time whenever placing trades like this. So that's really, all I do expect to happen in the market. So I'm not really looking for other trades that might work for me. Let's see, what do we have also over here on our energy sectors? Oil has been pretty crazy. I mean, some nice moves up and down. And you can see it just trailed on down, popped all the way back up. I mean, in a very short period of time, too. Okay? All the way back up to settlement. And that may not seem like a big move, but if you understand, the value of an oil contract, you're talking, 104.30 all the way up to like 105.30. That's a $1,000 move. $1,000 move back down. $1,000 plus move back up. I mean, it's a massive, massive moves on oil right there. All right, we'll stay there. We'll be back right after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. So checking out everything right now in the markets, just seeing where everything is at, what we can do, what we can take advantage of. All the different trades. We've got the pound is just screaming higher. So despite that massive drop, it decided to turn it around and is moving on up. So a lot of different ways to play this. It's been going higher right now for a while. But you could look at any of these in the money trades over here that you could do. And there's different ways to play these. Some of the ways I've been playing with. One, of course, you always have the, traditional, premium collection trade in the last 15 minutes. But you can also go in and, we can widen the parameters out a little bit. And if you can find a trade that has the right risk-reward requirements on it, you might be able to get in for, say, like $60, and then sell for, say, $80, and basically go for a $20 profit. But if it drops down to, say, like $40, you get out of the trade. Well, if it's at $50, you're looking to get out at $70. If it comes down to, $30, you get out of the trade. Basically going into scalping the market. On these, these pops and these moves as the market's moving, in your favor. So I will tell you, it gets harder to trail stops if you go at the money or if you go out of the money. It's because they get really, really volatile. So you can do it, but just expect a lot of volatility if you go in and try to pull that off, okay? Because the market can just, fly all around, and the binaries will just, they move super, super fast. Okay? But let's check out. Let's see what we got on these forex pairs. We'll pull up the pound dollar, see if anything's lining up that looks like it might work for us. Right here. There we go. And as you can see, it's sort of been screaming higher. Dollar's just been getting, bushwhacked over here. Just knocked out really hard. -5 all the way up. And what do? We just hit a 1 deviation level. So, obviously use caution right there. Did we close above that deviation level? Yes, we did. So, if we are long in the trade, we are going to be moving our stop up here to 5 ticks below that bar, that 10-minute bar that closed above the deviation. And so you do want to have that stop in place. You want to get out. You don't want to take maximum loss, even if you're trying to spread or binary. There's no reason to, in most cases, to have to take a maximum loss on a trade. Okay? Let's see here. So let's see what that puts us. That puts us pound dollar. We'll keep watching that one. I'll pull it over to another screen and keep my eye on it. And we'll look at a couple other markets that we might be able to do. Let's see here. That one, like most of these, are all sitting like right at their deviations. So we got dollar CAD. Okay, finally it hit the 1 deviation mark. Now it's starting to bounce back up. The dollar might start getting a little bit of strength now that everything's finally hitting the deviation level. Let's see, dollar franc. So it busted through the 1 deviation. So now again, if you were short the dollar franc, you'd have your stop right up here. And don't be surprised to see it turn around after moving a full deviation. Okay. Let's see, we'll go in, let's look at dollar yen. Has not hit the deviation line, but it's come within like a few ticks of it. So, about this point is where we would expect if the dollar yen's going to bounce, move on up. We're pretty much at that price point right now. Okay? So, it did bounce already off of it. If you look at it, it hit here, it bounced up to 0.7, came back down to -1. We'll see if we can go back up. Does it have the strength to break out of this deviation, this 0.7 deviation level? It really served as a pretty good support line. You can see that hit it, bounced off of it, hit it again, sort of broke through it a little bit, but then bounced back up. Right here, it came right through it, solid, right down to 1, bounced up, became a bit of a resistance level for it. So we'll see if the dollar can start gaining some of that strength back finally, then it might be able to move on higher. And let's check it out. What does that give us? Maybe like a 99.60 trade or something like that we could look at. So I'll pull that up on here. Let's try to give you a little variety of potential trades. So far we haven't really got a great setup yet. And, you just got to be patient. Got to find the right trades. Let's see here. So 99.49, 99.54, 99.59. It's like a 2 o'clock expiration. Is it going to move fast enough? You may need like an hour on that trade. So if you ever want more time, you just scroll up here. We can uncheck a bunch of this stuff. And then we can say, give me a little more time. You can see what's available. And you can also lower your risk down if you want to look at in the monies and out of the monies, like 5 to 95. And then I'll show you, so let's say if you're targeting 99.60, like you could buy it right now for, $32. Okay? So on that trade right there, if you bought that one, if it did expire above it, then you'd be able to make $68 on that trade. And that would make it where it wouldn't have to totally break through the 99.66, but it could move on back up to that point. Sort of like basically just a swing trade. So, because that's what the market's been doing. It's been popping up and down, up and down. And so that's one trade to look at. And I'm just trying to give you a few different choices over here to see, what all, again, you can take advantage of. And notice you have a 99.60, 99.62. Obviously, the 60 is closer. That's only $2 more. That 2 pips can definitely be worth it for you. Okay? So just be aware of that. And because it can make you, quite a bit. And let's see, 2 pips could literally be the difference between winning and losing on the trade. If you don't like that, let's say you think it's going to go lower, then you can go down here, you could sell like at 99.40 and need to break through this 1 deviation. But if it breaks it, it could really, where would it go? It'd probably go on down to the next deviation level. So if it broke 99.40, we'd be looking for a move down to like 98.99 as far as low as it could move. And so you can go, well, is there a good trade setup based on that? So I can see 2 things. One is I got a 99.40 down here for $73. And that's a nice profit potential trade right there. So you could take that, give you $73 profit potential on a $27 risk. Could even be a hedge on a trade that you might want to put on. So just trying to, like I said, put some variety in the basket. And that's basically doing a strangle if you did both. So if you're like, hey, I think it's going to break up or break down, you can put both on. Now, this is something I talk about occasionally, and this doing a binary butterfly. What if we took both of those trades and we did the opposite? What if we said, I think it's going to stay below 99.60 because I think it's going to go flat, and I think it's going to stay above 99.40. Okay? And where would you where would you come up with these numbers? All right? So if you actually said this, and you're putting this trade on, like what would make you even think this might be a possibility? Okay? Well, what would do that is when you're looking over here at the chart, you're like, well, this is a deviation level, 99.40. Hadn't really broken down below it, so that looks like a good potential, buy. And then 99.60, I mean, it may pop it, but maybe it'll come back down. And so if I combine these two pieces together, I'd make like $220 on this one and make $275 on that one, or basically I'd make about $50 combined. And if one side wins, the other side, could lose. Both sides can't lose, and that's what's important. You look at this and you're like, well, I'm risking $780 on one side and $720 on the other. Am I risking $1,400, $1,500? No. Only one side can lose. Why? Because the dollar yen can either be between 99.60, like below, it could either be below 99.60 and above 99.40, or meaning inside the range, or it could be above 99.60, or it could be below 99.40. But it cannot be both below, okay, 99.40 and 99. Basically, it can't be the inverse. And let me draw it. It will make even more sense. So like right here, like it could be inside this range, 99.60 to 99.40. But think about it. It can't be both below 99.40 and above 99.60. It can't be in both above and below at the same time. So one side is going to profit. Guaranteed, if you do the trade, one of the two sides will profit. Ideally, both of them will profit if it stays in the range. This is an iron condor with like 17 minutes, or an hour and 17 minutes to go, okay? So ideally, or an iron butterfly, same thing, as far as a risk-reward graph. And so right here, basically, you're pegging it to a price, and you have a little room on each side. Okay, so you're pegging it to be like right in the center, and you'll basically make max profit if it'll stay in that range. And knowing this, what does that mean? Well, that means that I could lose $725 here, but I could make $220 here. So I basically have about a $500 risk. And here I could lose $780 here, but I could make $275 here. So I have about a $500 risk. Or it could stay in between. I could make $275 and $220, and I could make about $500. So we're talking about a one-to-one risk-reward trade that you could put on. And with that trade, if it went outside of it, expired outside of it, I'd lose 50. If it stays inside of it, I'd make 50, or I'd lose 500 and make 500 if I did 10. Okay? And so that's a pretty sweet setup on a risk-reward. And what's even cooler is if it goes down and it hits the strike, and this is really where this trade comes into, I think, has a lot of power, is if I go in and do this trade, if it hits one of my strikes, the other strike is probably going to be worth like $5. Okay? So if it goes down and it hit 9, sold it for 27, I made 17 on it. And then I bought this one for 80 and I lost 30 on it, which means I'm losing about $15 net. So after I make, $15 on one side and lose 25, $30 on the other, then I'll only be down $10 or $15. Well, remember, what is my profit potential? 25 plus 25, my profit potential is $50. Okay? But if I'll exit if it hits the strike, then my risk is only about $15 or $20, which gives me a risk-reward trade of like 1 to 2, or a 2 to 1 reward to risk. Meaning I can make about 50 for, risking 15 or $20. It's a little better than 2 to 1, actually, on the reward to risk ratio. So now I get a premium collection trade that's in between that range that I can take advantage of. So these are really cool to learn, these binary butterflies, and it makes them really easy to do with the scanner, because you can go in and you just put in the parameters like 65 to 95 or whatever, and it'll show you what contracts currently qualify. Okay? Let's see here. So that's another trade you can do. So I'm just trying to give you a little example. So if you want to go long, you can do this trade. If you want to go short, you can do this trade. If you wanted to go neutral, you can do the trade I'm showing you right here. So there's a lot of different ways to put the, the pieces of the pie together. And, another thing you can do, this is sort of cool. Let me show you this. Over here is maybe like you bought the 99.60, okay? Like seasonal stats show that dollar-yen is usually higher. So maybe you bought that one. So we can go over here and check this out. You got 99.62, okay? So maybe you bought the 99.60, but you could actually move up, all right, and sell the 99.62. It's like right there. So if you were, let's say you were already long 99.60 right here, so like you weren't able to sell that one, but you want to have that, you want to make that money if it does go up there, and you go and sell this one right here, then now this would allow you to do a neutral trade with your long trade still on, in order to be able to, help neutralize that risk. So that's one way to do it. If you combine the two together, would there be any advantage? So that's one thing I had a trader ask me the other day. Well, what if I did both of them? What if I bought like 99.60 and sold 99.62? Wouldn't do you a whole lot of good. Because if, one wins, it's going to make like 200, let's say if you got out when it hit the strike, which is basically what you'd need to do, then you'd basically be at a break even. So it wouldn't really help you to combine the two, because if it goes up, this one makes like 725, this one loses 780. If it goes down, this one makes, or this one loses 275, this one makes like 220. So combining the two together wouldn't really do you any good. The only way it would do you good is if you turn it into a ratio spread. Like I had a caller calling the other day, Richard called in, talking about that. If you did a ratio, it could be beneficial for you, potentially. Like if you went in and you sold two 99.62s. So, but I mean, you're going to go in and you're putting in double the risk on, double the margin on. Okay, so if we just make it a simple number, 2, I'm going to make this a 1. Then, what I've done is I said, hey, I think it's going to stay below 99.62. Okay? And if it does, then I'm fine on the trade. And I risked $26, okay, on the other trade. So by selling 2 of those, what I've basically done is covered my cost of the one that I bought at 26. So I can't lose on the one that I bought because I actually net a $44 profit on the 2 I sold. I'd lose $27 on the one I bought. And the 2 combined is a ratio spread. I have a net credit. Now what happens if it goes up and it hits like 99.60? Well, I get out of both. I make about 20, 30 bucks on the one I bought. And I lose about, $50 on the one I sold, so I have a $25 risk. So I have a 1-to-1 risk-reward ratio, and I'm able to put the trade on. So there's just a few ways to go in and take advantage of it. But stay right there. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just looking at everything, seeing what we got across the board that we might be able to take advantage of. We do have some potential trades, and some of them are really close, though, right? So we got dollar yen right here, 99.49. Oh, how close is close? Well, one of the cool things you can do, open up a ticket, you'll actually see the price that they're quoting based off. They're at 99.53, so that's about 4 ticks. It may be different than what you're looking at on your chart. This is the mark of the bid and the ask spread, okay? So right there, mark of the bid and the ask, and on that one. And so 99.51, 99.53, 99.51. It's going to be a close trade. All right, so there's one for us. Let's see what else we got that we can do. And so I'll throw that one in. And let's see, we'll go down a little bit further. Let's check out the other pairs that are out there. And let's see, we got Aussie dollar. Let's tighten this up just so we see the ones in the next 15 minutes. Less stuff on the screen. You have to analyze. Got euro dollar, 80.50. We can pull that up. And I am looking at a chart on my other screens too. Just only so many things I can show over here. So 46 is only 2 ticks on that one. So that one's pretty. That's just too close. So you're talking like 1 to 2 ticks. So you better be pretty confident that that euro dollar is going to rise if you're going to go in and you're going to grab that trade, because that is a very, very tight trade. Okay? So we got that one as a possibility, but it looks like it's trending down to me. So I would avoid that euro-dollar trade. I'm just closing that out, get it out of the way. Okay, so we'll go down here, no euro-dollar trade. What about pound-dollar? So pound-dollar, we're getting a little bit of a pullback on the pound-dollar, it might be. So that could be a possibility, and you just want to have all these set up and ready to go. Use the scanner to see what possibilities are there. Then check out the chart to see if the chart lines up with the possibility. So right now it's saying, hey, less than 53.64. Does that give you a trade that you could actually do, take advantage of? And so we'll go in here, we'll look at that. 53.62, 53.64. That's going to be a close one, a very close one. I'm pulling up the chart, looking at it. Nope, not doing it. Market's trending up, just asking to get hit. Okay? So probably going to stay away from that trade. Now, some people go in, though, why not just buy for $29? I'll make $70. As long as it moves up 2 more ticks. But if it decides to stay flat, you're going to lose all of it. Okay? So just be aware of that. And it could be the greatest trade you ever made, could be a horrible trade. So it's really hard to tell when they're that close. See how this thing just starts flipping around like crazy, going a little bit nuts? So it definitely is a possibility to do out of the money. It's just, if it goes up because one tick back, you're toast. All right? So not looking at that one right now. Go in and see if there's anything else. Check out the non-dollar quote currencies. And a dollar yen, we got nothing. Pound yen. Pound yen's a little nuts. You always have to be careful on pound yen. And let's see. We got our $1 yen one. That one's already on and good to go. So the 99.49 one. It's at 99.53 right now. So that one is profitable. That's the first one we did that I did place. 152.92, 152.90. Okay, market makers just pulled their quotes. So now we're noticing, like, see how this went blank. 89. So that might be a good trade. That's still too close for pound yen because it can move like 10 ticks in a heartbeat. And see if there's anything sitting out there. It doesn't look like there's anything sitting out there. And but you can do this. You can pull it up, and it's cool because you can go in and you can find all the 2 o'clock expirations, and there's quite a few of them. And you can scroll through and just find like what exists that you can look at. This makes it very, very, very fast. And then all you have to do is have your charts ready to go, so you can start flipping through them in those last 15 minutes. So, anyways, I hope you all have a great day. Have a safe day out there. Good luck in your trading, and I will see you tomorrow here on the Diagnostic Trading Hour. Bye.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.